Webull closed Thursday at $12.74, up about 13 cents on the day, which works out to a 1% gain. It doesn't sound like a huge move, but it came right after the stock touched its lowest closing level in a month. So naturally the question is, was this bounce just a bit of relief, or is it a sign that Webull's fundamentals are finally starting to reassert themselves? Here's the thing. On paper, Webull has plenty going for it. The fundamentals are strong. In the most recent quarter, revenue grew by more than 40% year-over-year, and that kind of growth is nothing to sneeze at. User assets on the platform hit new highs, crypto trading has been integrated, and the company has officially started its expansion into Europe by launching in the Netherlands. For a fintech that's still relatively early in its public journey, those are major achievements. But if you zoom in on the price action, the story looks different. For the better part of the last few weeks, Webull has been stuck in a tight range, bouncing between roughly $12.50 at the low end and about $13.50 at the top. It's a classic case of consolidation, where the fundamentals look great on paper but the stock isn't breaking out. So the big question is, why? Is this just a healthy pause before the next rally, or is the market quietly saying the good news has already been priced in? Let's unpack that. First, the positives. The revenue growth Webull posted in the second quarter shows that demand for trading and investing is alive and well. Options volumes and equities trading have been strong. Crypto activity has come back online, with users able to access Bitcoin and Ethereum. And it's not just about trading revenue. The fact that customer assets on the platform are at record levels suggests a deeper relationship with users. They're not just opening accounts, they're actually keeping capital on the platform and growing it there. That's a powerful long-term signal. The European expansion is also worth pausing on. Entering the EU market through the Netherlands is no small feat. It opens the door to millions of potential users who want access to US equities, ETFs, fractional shares, and options. If Webull executes on that strategy, it's not hard to imagine the user base scaling significantly over the next few years. Global expansion is one of the key levers for fintech valuation growth, and Webull is now pulling that lever. So if the fundamentals are that strong, why isn't the stock moving higher? Part of the answer is that the company is still unprofitable. Losses actually widened compared to the same period last year. The costs of scaling up, everything from marketing to compensation to tech infrastructure, are weighing on the bottom line. For growth investors, that might be acceptable, but for the market as a whole, it's a reminder that execution risk is still real. Investors are essentially being asked to believe in future profitability, and that belief can waver when losses keep piling up. The second reason is technical. Stocks don't just move on fundamentals, they move on momentum and sentiment. Right now Webull's relative strength rating is above 80, which is objectively good, but the chart is showing hesitation. Every time the stock tries to push toward 1360, it gets pushed back. Every time it dips toward 1270, buyers show up. That creates a trading band, and while that's better than a downtrend, it also means the stock is range-bound until something forces it out. And that's the crux of this video. Webull's fundamentals are strong, but the price range is telling a different story. The market is essentially saying, we've heard the good news, now show us what's next. Without a fresh catalyst, investors seem reluctant to push the stock decisively higher. So what could change that dynamic? Let's look at the catalysts that could drive the next leg. First, crypto trading metrics. If Webull shows that users are adopting crypto trading at scale, that could be a major boost to both revenue and investor sentiment. Remember, crypto is volatile, and engagement rises and falls quickly, but platforms that can capture that volume when interest surges stand to benefit disproportionately. Second, international traction. The EU launch is the start, not the finish. If we see strong early adoption in the Netherlands and signs of a wider European rollout, investors will start to model in much higher user growth. That could change the narrative from one of cautious optimism to one of clear expansion. Third, macro sentiment. Rate cuts have been a tailwind for growth stocks, including fintechs. If the Federal Reserve continues to signal patience and the market prices in a friendlier policy environment, risk appetite improves, and that spills over into names like Webull. On the flip side, if inflation surprises to the upside and rate cut expectations get dialed back, that could weigh on the entire sector. Now, let's talk about risks, because they matter just as much. Competition in the commission-free brokerage space is fierce. Robinhood, Fidelity, Schwab, and others are all fighting for the same pool of digitally savvy users. Webble needs to keep innovating, not just in pricing, but in features and user experience, to stand out. Then there's the volatility of crypto. Adding digital assets to the platform gives Webble another growth driver, but it also ties them to a market that can turn negative quickly. If crypto sentiment sours, it could drag on user activity and revenue. And of course, profitability remains the elephant in the room. As long as losses keep widening, the market will be cautious about rewarding the stock with a premium multiple. So what does this all add up to? The way I see it, Webble's fundamentals and the price action are temporarily out of sync. Fundamentally, the story is strong. Technically, the chart is stuck. But that doesn't mean one side is wrong. It just means the market is in wait-and-see mode. If the next set of catalysts deliver, the price will eventually catch up with the fundamentals. If not, then maybe the fundamentals themselves get questioned, and the stock could drift lower. For traders, the range itself is an opportunity. Buy near support, sell near resistance, keep stops tight. For long-term investors, the range is more of a patience game. It's about watching the company execute, knowing that eventually the market will reconcile strong fundamentals with price performance. And let's not forget, consolidations like this are often healthy. Stocks don't move in straight lines. They surge, they consolidate, then they surge again. What we're seeing now might just be the consolidation phase. If support around 1270 holds and the stock can build momentum, a breakout above 1360 could come sooner than expected. That's why it's so important to watch both the fundamentals and the technicals. So to wrap it all up, Webble closed Thursday at 1274, up 13 cents on the day, bouncing back from a monthly low. The fundamentals are undeniably strong: revenue growth, record user assets, crypto trading, and European expansion. But the stock is range-bound, trading between $12.5 and $13.5, and that suggests the market is waiting for the next catalyst. The key themes to watch are crypto adoption, international traction, and macro sentiment. Risks include competition, crypto volatility, and ongoing losses. My take is cautious optimism. Strong fundamentals usually win out, but for now, the price is telling a different story. So what do you think? Is Webble's range just a healthy pause before the next rally, or is the market signaling that optimism is already priced in? Let me know your thoughts in the comments. Make sure to like this video if you found the analysis helpful, and subscribe for more updates on Webble and other fintech stocks. Thanks for watching, and I'll see you in the next one.